We really like lithium and copper for obvious reasons. Electrification of the world, supply is unlikely to keep up with demand, and the one that we prefer in that space is IGO. I think that's a pretty well-worn thesis, but we still believe there's quite a bit more there to go. Beyond that is oil, again, a relatively understood thesis, ultimately a lack of investment on the supply side as demand's still recovering. Throw on top of that a potential reduction in buying of oil from Russia, and the markets become even tighter. The fourth one that's perhaps a little bit more divisive is on gold. So we quite like gold. It's an inflation hedge, it's a safe haven asset. Arguably inflation's gotten worse with everything that's happening in Russia. And you're also seeing, we believe, over the next 6 months, potential deterioration in economic conditions, which could encourage people to look at gold again. The final part of the real bull case, which is yet to play out and may or may not, depending on various factors, is obviously we've seen the weaponization of central bank reserves.
You're talking about gold there. Has the trigger not been for essentially when this crisis began? Because, of course, the gold bugs have been immensely frustrated over the past 12 months or so that it hasn't moved higher with the prospect of rising inflation. But are you saying then, even if this crisis in Ukraine is resolved, that we'll continue to see that support for gold?
I think all the commodities will see a pullback if the Russia-Ukraine crisis has been resolved, ultimately. And the way in which that's resolved does change things. We believe there probably needs to be a change in the entire government of Russia for people to forgive them and for sanctions to be removed. So even post this, I think the world has seen that sanctions are used in a way that affects your ability to access your foreign reserves. So we believe there's probably a structural change in the demand for gold. But admittedly, it is a risk-off asset. Therefore, if uncertainty does diminish, yes, we would expect that to pull back ultimately in a short-term view. And the other negative that we could see playing out for gold is ultimately if real rates continue to rise. But again, if economic conditions deteriorate, we perhaps don't expect that. And the final thing to remember is that the Aussie gold miners are 30% below where they were when gold was as high. So they're by no means pricing this in, albeit I do caveat that if Russia is resolved tomorrow, they will of course have a short-term pullback.